How to get started. Perfect. All right. So you guys can, so actually what I'll do is I'll talk about this upcoming week. I'm gonna make the weekly commentary regardless, but in the meantime, if you have any questions about anything about the course content or about the material, just put that in the chat box and I'll get through them. But yeah, so let's actually start off. I'm gonna start off with crypto. Now, this is exactly why in the commentary. I wanted to see a sell-off because this is why I like the engulfing bar. You know how most people what they'll do is they do the top-down analysis, right? So they start off on all these different time frames and then they work their way down on different time frames. But the thing is this, when you get the engulfing bar, you can just kind of see like, okay, if we're sweeping liquidity, right? Because before every big market move like this, some sort of run on stops typically will happen, right? Like again, look at this, right? The market took out this liquidity pool and had this drop lower. Now, when the engulfing bar kind of forms, because again, for this example, we swept out this high. We had a closure below the prior candles, close the pro before below the next opening price. Then we had the sell off, and we had a bunch of imbalances to the left of it. So we had objectives that were not met yet. This just makes it easier because if you see the engulfing bar, now you can see, hey, does the chart actually give a bearish signal? So that's the reason why we were kind of looking for that. And then all you do, then you just look for lower time frame, right? I mean, I even got a daily bearish engulfing that forms, and then we had to sell off further. So that's why I personally like to use the engulfing bars because it just kind of sets the stage. Instead of like doing the analysis first, you can look to see which engulfing bars are forming on the higher time frame, and then you do your analysis. Like, does this actually give a potential setup where we have downside objectives and we already swept liquidity? Now, the reason why I'm actually bearish on indices, let me actually go to NQ because on the monthly time frame, we actually just closed. And what do we have? Right? We have this monthly engulfing candle. Price took out the prior month's high. We have a closure beneath the opening price. And now this to me looks like we're just going to sell off. Now, how far do we sell off? That's always like the big question. But for me, I think there should be a gap somewhere in here on lower time frame. Let me see. Yeah, there's this gap right here that never got filled. So, and when this month, so think about the PO3 concept, right? Now we have the next candle that will open up, assuming we don't have a big gap around this price, around the closing price. So if we have like some sort of rally, right, and then we have NFP towards end of the week, I want to see if we're going to have that manipulation move up and then we're going to start to flip on the candle and start to head a little bit lower. That's kind of what I'm anticipating. Same thing with ES. ES did not close as an engulfing because we did not close below the opening price, but we still did sweep the liquidity above here. We also have a fair value gap on the monthly. And then when I go down to the weekly time frame, right, we're kind of we retested this overall range, this order block essentially. But I just do it from swing low to swing high. So we have this scenario in here. So now what I want to see, again, same thing, power of three, the new weekly candle, the new monthly candle where we have a open, maybe we rally up a little bit and then start to have a sell-off. On the daily time frame, maybe it clears like these highs in here first, and then we sell off. We'll see how we kind of trade. The thing is this, on the power of three, we don't really know how far this is going to go. Unless you want to trade the weekly, unless someone wants to trade like a weekly candle, like maybe someone in here is like a real swing trader, you could theoretically just kind of like on the next open, you could just kind of just sell it and then maybe put a stop loss above the range. So pretty much above the 50% of this overall breaker, right? Because we have a swing low, swing high, breakdown. You could theoretically just put the stop loss up here. That's assuming you want to trade a weekly bar and then you just maybe target here. Because theoretically, if let's just say you got a short entry here, put a stop loss there, and then you target this, right? As a swing trader, you could get 1.88 on this one. Obviously, the risk to reward improves as you get lower time frame entry confirmations. So yeah, so that's what I'm looking for on indices this week. Euro, I mean, there's a bunch of weekly engulfing bars to be honest. With Euro is interesting though. That's why I'm gonna we have this weekly engulfing, but we're kind of in consolidation. So that's why I'm a little bit like see, I want to kind of see what's gonna occur on this one. Same thing with DXY. We have this weekly engulfing as well, so that we kind of push up into the range. On the monthly, we also took out this liquidity pool as well, and we closed back a bit inside, new monthly candle. So I'll kind of see like if the next candle open, push up, and then maybe some sort of expansion move higher. So I'm gonna lean towards bullish DXY, bearish euro, and also gold. This is the one that I really like as well. I really like this one because again, on the weekly, what do we have? We have a sweep of liquidity. We have the engulfing bar that formed. Let me actually just so we ever so slightly just took out this liquidity pool. And not only that, but we also have an inversion. The market inverted this level. So now what do I want to see on the next weekly candle? I want to see an open, I want to see a push up, and then I want to see a move lower. How much lower can we go? Right? What I typically do to see, okay, is there a potential target? Right? We have this fair value gap here on the weekly, but look at the monthly time frame. New monthly candle as well. And look at the monthly candle, right? We have this overall doji and we have this fair value gap that just formed. When the next monthly candle opens, this is going to be a potential objective. See, now what do we have? We have premium down to discount. We have two clear definable ranges after liquidities have been already been ran out. So that's what I'm just looking for. And then we also have this gap here on this is the futures chart on gold. It's a GC. So for those that actually want to look at the futures contract, now we have this as a potential target, as well as this lines up with the monthly fair value gap. So to me, this is pretty straightforward. You know, as long as we maintain these candle structure where the market is making lower lows, lower highs and lower lows, I'm pretty much anticipating another sell-off. Like to me, this is probably one of this and indices are kind of like the two ones that I'm watching for. I really like this gold though because it has everything that I look for. Run on stops, EBP on the weekly. We have a change in state of price because this bullish fair value gap just got essentially just got inverted. And we also have a clear downside objective that has not been traded to yet. This is like textbook for the way I like to trade. So I'm watching this one more so than EU. I like gold and I like indices. So we'll see how we kind of play out going into the new week. And again, I'm going to put this in a weekly commentary as well, but just to start off. But yeah, guys. So let me know in the comment section if you guys have any questions. I'll start going through any Q&As. And yeah, whether it's about the course concept, whether it's you want me to look at a different pair, just let me know in the comment section in here. And we'll go through any questions. Hey, Sarah, what's going on? Hope everything's well with you. GU. Okay, so pound. Same thing, honestly. We have the weekly engulfing as well. Like, see, this is kind of similar to gold, but this one already hit this fair value gap. I like to see, like, imagine that we had this candle, like this wick was like right here, somewhere like around here. And we had a little bit of room to the downside. That's the one thing that I always, same thing with the dollar yen example. Like when I see, like, I want people, when you look for a trade, right? It doesn't matter the time frame, but it should always be like this. The market is going to go from a discount to a premium and vice versa, right? The market is going to go from some sort of premium to some sort of like, discount range. That's all the market is going to do. We have to find opportunities where if the market sweeps liquidity at a discount, right? At discount or a reference point. So we have a liquidity pool that we swept, right? And again, this was a hindsight example. Now, if the market is going to have a reprice to the upside, is there an objective that has not been traded to yet? That's the key. That's the one thing I learned from ICT. The most important thing I've ever learned from ICT was that looking for an objective or a target that the market has not been traded to yet. At this current time, when we talked about it on this day, the market did not trade up here. However, we did sweep liquidity. We did kind of create this little bit of a order block in here. And then the next day, next candle, look at this power of three. The market comes down. And then I already made a video about this inside of the Discord. And we had an expansion move to that fair value gap. This small range, and that's what people don't understand about higher time frame analysis. This small little range, in the grand scheme of all of this, doesn't look much. But again, guys, let's go ahead and this whole daily candle, 178 pips. If you only catch 50% of that range, you're catching about 90 pips. So like that's why I like to see these types of examples. So with GU, not saying that it can go lower because obviously it could still maybe goes all the way down to this daily fair value gap and goes a little bit lower, especially if DXY continues higher, which I personally think DXY will. Um, yeah, there's still room to the downside. I would, for me though, I would want to see same thing, right? New week open. Would want to see some sort of rally first, and then look for maybe a lower time frame entry, and then possibly, down here. Now, do we go all the way into this fair value gap? I don't know. It really depends on DXY, how deep DXY trades back into the range. To be fair though, I would not want GU. I would not want it to kind of come down into this. So here's a lesson on something called a breakaway gap, meaning a gap that more than likely will not get filled. If you see a candle closure, and I actually got this from T-Trade, so shout out to him. So when you have like one bearish candle like this, right? The next candle, if it closes below the low, typically any fair value gap that's above here, you more than likely are not going to see this get traded back into. So ideally, this overall candle's range now typically should like kind of like hold as quote unquote resistance. So think of it like this: when the market moves in momentum, think of it like you see how these three candles move like that, where they're essentially making low. This one in this example, they're making higher highs and higher, so higher highs and higher lows, right? It's the same thing like So for this example, on the daily time frame, we have lower lows and lower highs, bearish structure, right? But except we don't have to go down to the lower time frame because look, this candle had a high, this candle had a low. The next candle had a high, and this next candle had a low. So essentially, high, low, lower high, lower low. So now typically, again, we don't want to see this get back up in here. Also, think about it from this lens. If it comes back up all the way over here, it might actually start to look a little bit bullish because it looks like maybe a swing low maybe has formed. So ideally, Friday's candle high does not get traded into, but we'll see. And again, DXY, the weekly candle, if we map out that range, right? The next weekly candle, like we would probably look for something around 25%, ideally. 50% would be a little bit deep of a retracement because sometimes when you have these momentum candles, you don't want to see too deep of a retracement. Like you definitely don't want to see about a 75 because think about it, then it would have broken beneath these opening prices, and now it would look pretty bearish. So that's kind of what I'm watching for next candle weekly open. I don't want to see too much of a retracement on the daily time frame. It would just yeah, it would kind of co coincide in here. Maybe it hits this fair value gap, but yeah. And then maybe start taking out liquidity here, maybe make a new high. We'll see. Excuse me. Okay, what do I think about UJ? Yeah, so this is also a good example. Someone asked in the chat on Friday. They're like, okay, so do we look for sells now? I'm like, no. Like for me, this is a no trade because two things. Number one, I don't know if this swing low in here that formed. I'm not sure if this is going to set the stage for the market to go even higher, right? At the same time, it already hit my objective to the upside. So I don't want to try to fade this. So two things, intermediate term structure on this current leg is bearish, right? We could all kind of agree on that, right? High, oops, we have a high, low, the market makes a lower high, low. Again, like I'm not gonna go through all of it, but yeah. So now this could continue. However, we already swept a major liquidity pool in here. So when you sweep liquidity, the problem is this. The market could just have a bigger move up and then maybe some sort of sell off later. Now, what we could do is we could go on the weekly time frame and just start to see, okay, well, how does the weekly look? How's the monthly look? Right? New monthly candle. We already swept this monthly low into this fair value gap on this current impulse, right? So from swing low to swing high, we had this big impulse. Like we're inside of 50% of that range, right? So instead of drawing the fib, TradingView has this feature now where you can actually just put the 50% of the box, which is pretty cool. And then the market already took out this low and inside of a fair value gap. So and it's a new month, so maybe it does push up a little bit higher. But see, like these are the trades I stay away from. I want to find ranges where the market goes from discount to premium, but we have still targets to go after. This to me could be like you could make a case for either side that we swept liquidity, and now when this weekly candle might form, and we might actually send it higher a little bit. That's why I don't like to trade these types of plays. So for me, on like UJ, I'm just not watching it right now. It matches golden house in the chat perfect. Yeah. Yeah, man, you're gonna see like this. This is not like the reason why I like engulfing bars and like even more. I have other candlestick patterns I'm like backtesting and trying to add to the arsenal. It's not objective. Like fair value gaps are kind of objective in a sense. I'm sorry, they're subjective. Like an engulfing bar is an engulfing bar, right? There's no, it's defined. So like you guys are going to see the same thing as you get more used to the content. The analysis is going to be very, very similar to myself and to other people as well. And that should be the case because we're tr all trading. If you're trading the EBP, we're all trading the same exact thing. Timothy, hey Omar, great job. Could you please go through US 30? I thought it would really drop after Thursday's bearish engulfing bar. So US 30, Dow Jones. Let's go to FXCM on which time frame was it? Thursday's bearish engulfing bar. Yeah, so the thing is this. This was actually like a pretty so we had one actually on Wednesday. It ran up one more time. And then the thing is this, when you kind of sweep to the low, you always have to be mindful. And I've talked about this before in the course content as well. I don't know if you're like brand new, but you always have to be a little bit mindful when this happens, when it sweeps the low, because on the retracement, we don't know if this is a low before we push higher. But to be fair, I mean, bro, if you got, I mean, this is the 50% mark, right? We have a huge fair value gap in here. This drop in here, you should have, if you looked for a little bit of a sell-off, you should have been able to make some money on this. If you, depending on your lower time frame entry criteria. Because we also had this breaker, right? We have swing high, swing low, the market pushed up. So you could draw that breaker out in time with this fair value gap, right? So you have this overall range, and if you do like the 50% of that fair value gap, I'm pretty sure it's like somewhere around here. So this still provided a move, you know? The thing is this, like sometimes like you have to be like again, if you're up and the market looks like this is a profitable potential trade. You should not be taking a loss, in my opinion. Especially because I think the market did this make a new low? Yeah, it did. And here's my rule of thumb. If I'm in a short like this and the market makes a lower low, right? So you have swing high, swing low, the market formed a lower high in here. Once you make a new low, you should either take profit, in my personal opinion, or if you were holding for a big move down here somewhere, based on the higher time frame, especially it's Friday. You know, Friday indices was dropping all week. Like you have to be mindful that there might be some sort of squeeze going into the end of the week, especially when indices have been dropping all week. Um, yeah. So the thing is, this still like played out, still gave you a potential setup, right? We had this fair value gap that was present. So when the market makes a new low, and if I get an entry here, maybe if I get an entry somewhere there on the lower time frame, you know, I'm usually taking profits, or at the very least, going to break even. So the analysis wasn't wrong. It's just, yeah, it depends on how you manage the trade. Excuse me. So Joshua, howdy from Texas. I'm just excited to complete the course and start finding any markets to avoid for beginners. I would say this, if you're a beginner, don't trade on volatile markets. So like indices, you can like study them, right? But be mindful because they're pretty volatile. Or at the very least, avoid taking big size on those assets. Like for me, when I first started, and that, you know what? I also avoid oil. Like people in the chat know, this oil is always all over the place. But I would stick to like EU, GU, Aussie, dollar CAD. Like FX pairs are they're a little bit slow moving, so it's like easier sometimes. It's easier sometimes to handle. But NQ and these assets are pretty volatile. So if you're not, yeah. So I'm not. Just make sure that like your risk is being managed, especially on NQ and indices, because again, it's very volatile. Sometimes they can weak you out. And also another piece of advice, if you're a beginner, um, focus. I mean, to be fair, anyone, daily, weekly, and 4 hour are my focus. I don't go beneath the 4 hour unless the daily and I talked about this in the webinar we had before. The daily, the weekly sometimes, but the daily and the 4 hour for me have to be aligned together for me to start looking down to the 1 hour. And I barely go on the M15 anymore. But there's no info on the gold spot chart. Yeah. So, Mel, the thing is this, I look at the futures charts now just because on the futures charts it's more like the data is centralized, meaning that's the actual price feed across all futures broker. The problem with spot on like with CFDs, like FX pairs and all these stuff, the problem with that is they vary from broker to broker because everyone has like their own feed. So that's why for gold, I just stuck to the futures chart. Okay, so Sarah, I got a question. I'm a bit embarrassed. I mean, listen, don't be embarrassed. We all blow accounts. So she blew funded account 2 months ago. Yeah, since then she's been improving the EBP and taking some beautiful setups, but still making stupid mistakes. That's eating her profits. We trust me, we've all been there. I know it's me and there's nothing you can teach to get me out of this. It's getting better, but if you can advise based on your personal journey, what have you done? Would be good to get more on psychology. Let me tell you this, Sarah. And I'll be just very blunt and upfront. Every single trader, mind you, I don't know if you guys are familiar with Kyle JCap. I'm really good friends with him. We're in a group chat together with a bunch of other really, really good traders, like traders who are making way more than me, like by a, and they're very, very talented. And the funniest part is this. The thing I've noticed is every single trader, doesn't matter how long you've been in the game, being around a lot of profitable traders, they all make mistakes. They all have bad psychological moments. They all go on tilt from time to time, but they limit it. That's the biggest key factor. And the thing is this, they don't go on tilt to the point that they just destroy their account in one day, which is, I think is growth. It's like we're all going to go on tilt. I don't care who you are. We're all going to go on tilt at some point, take some stupid trade at some point. Now, the key is this. You don't want it to be to the point where like one day it just like destroys your whole account. Like that's when the tilt becomes a little bit detrimental, right? Like if you go on tilt and maybe it sets you back like a couple of days, that's very normal. Like if you, I'm telling you guys, it's very, very normal. I used to think coming up that that was like, oh my God, I suck. Oh my God, like I'm terrible. Like how come I'm trading well for like 2 weeks and then one day I have a bad day and I start to go on tilt. Like, don't get me wrong. Like, we should all limit it as much as possible. Anyone who tells you that they never go on tilt, number one, they're probably trading micro lots, right? And no offense to anyone here, you guys trade micro lots, but there's a different ball game when you actually are risking like money. Like anyone who tells you that they never go on tilt, they're probably trading very small size or they're just not really trading because it's impossible if you're trying to trade size and you're trying to like get to that next level. Now, the only thing I would say is this. I can't really, yeah, like you said, like, there's nothing I can really teach anyone in terms of like that because the thing is, as humans, we all know what we need to do sometimes, right? But I will say this one thing that has helped me psychologically, that's a practical thing that someone can do. Number one, I don't look at the lower time frame. Like the lower time frame for me is anything below 1 hour. Anything below 1 hour, I cut that out. I stick to my 4 hour and my daily charts because I notice when I'm in the M5, M15 trying to time an entry, trying to get a tight stop loss, I put myself in a position where I go on tilt. Now, number two, focused. I mean, listen, trading, I mean, how long does it really take us, right? It takes us like maybe a few minutes to execute. Like we're watching the charts, but the thing is this is the beauty of the 4 hour and the daily time frame. If I'm watching a 4 hour chart, right, on indices, I know what time each 4 hour candle will print. 6 o'clock, 10 o'clock, right? On FX is a little bit different. It's going to be 5 o'clock and 9 o'clock. All I got to do, and that's why I have the golden hour. I just check the charts during the golden hour during New York session, New York open, and London close. And I look for my plays. So I limit the screen time, and I've actually picked up like other ventures outside of trading. So if you're someone who like maybe you have a career, maybe you have a job, in my opinion, that's actually a benefit. I don't subscribe to like people trying to become a full-time trader. Like you could make a full-time income, don't get me wrong. And to be honest, your income from trading could be more than your job. That's very normal. But like trying to trade full time and like put all your attention on trading when all we're doing is like maybe trading a couple hours a day, in my opinion, like that just puts too much pressure on you. And not only that, but it also is just not feasible, honestly. Especially if you're older and you have a family. Like I'm about to be 30 this month. So, my 20s, in my early 20s when I was first starting, like I started trading around 23. I found out about it in college around 21. I didn't start trading until about 22. I started to like dabble in a little bit. 23 is when I started to actually like trade forex. So for me, like it was way easier to trade back then and be all I'm gonna trade full time. But then as you get older, as you know, if you have kids, if you have a family, like it's not a great way to make a living, you know, but it's a great way to have supplemental income. I truly believe people can make thousands of dollars a month, like let's say 1,000, 2,000, $3,000 on the low end. Most people I truly feel can do that. Especially with props. That's the thing, especially with prop firms. Like 100%, I believe most people can do that. Now, if you want to make $10,000, $15,000, $20,000 a month, like it's the same thing as making a couple thousand, but your psychology does have to improve on that. So my number one advice to people is if you put too much pressure on yourself to become a successful trader because you need it to work, it's very, very difficult to be honest. Very, very difficult. Yeah. So Eunice asks, I want to know what approach you would recommend for 4 hour swing trading. I don't have time. Yeah, so Eunice, this is a perfect question because I do the same exact thing. So what you want to do is you want to look for some sort of like again premium to discount, discount to premium. So if let's just say on this daily chart on EU, for example, right? Maybe we were looking for this higher high as an example, right? And maybe we saw this fair value gap and we were looking for that expansion move higher. So we were waiting for a backside move. Boom. We have the backside moving here. So now on this daily candle, we create a change in state of price because these down close candles now become like essentially like our order blocks. And the beautiful thing is price comes back within this daily candle, right? And this overall swing. So swing low, swing high. We come back. I'm going to draw the fib just for completeness sake, but I guess this is like the 50% mark. Beautiful. So now we're kind of inside of a discount. Now, all you got to do in this example, once you have your daily time frame or your daily swings or whatever the case may be, if you're playing continuation or if you're playing reversal, you just go down to the 4 hour time frame and just look for some sort of confirmation. In this example, we just kind of rallied up high first and then took out the liquidity. So there really was no confirmation. But on the front side move, like let's just say we talked about this before. We have this overall fair value gap and we have a prior swing high. This could be your retest point. Excuse me. So like if you bought on the front side move, which I'm not a fan of all the time, you know, but if you look for the backside move, this one you would have missed out on. However, like if you get like let's just assume for argument's sake, you got some sort of confirmation like in here, and you're able to get into before the market makes a higher high. That's it. You're done. You know, like that could be the confirmation entry that you use. Now, again, if you want the confirmation entries, I don't know if you've been in here for a while or not, but in the WAP, inside of the webinars, in the recordings, I made a whole lower time frame entry webinar. I think it's about 40 minutes plus long, and that's every confirmation I use. So find out your daily bias. Even same, you know what? Same thing here on gold. Um, like for this upcoming week, right? Like if you have a daily and weekly bias, perfect. Now you just wait for the 4 hour to kind of confirm. So if we come back up in here, right, and then maybe on the if you go drop down to the 4 hour time frame, maybe we see inside of the 4 hour, maybe the market comes up in here, and then on the 4 hour time frame we have a big, you know, engulfing, bearish engulf, and guess what? You just play it a retracement back into it, and then you have your targets on the daily or the weekly, and that's about it. And then you just manage to trade on the 4 hour time frame. And once the market makes new lows, again, you can debate on how you want to trade that. So it's very easy. So it's the same thing. Like, you know how I talk about the lower time frame entries? Your lower time frame entry could be on the 4 hour. Lower time frame entry doesn't mean M5, M15. Okay, begin 4th of February 2025, and let's say in the back of your mind. So let's actually go to dollar yen on this first, on February 4th. All right. Yeah, sorry guys. Still a little bit sick. Okay, so February 4th on this candle. Let's say in the back of your mind, you already knew your directional bias for the day on the 4th of February, looking for shorts. How will you go into that expansion for the day? To enter a sell for the day. I would like your thoughts on this, starting from the daily, going down to your 4 hour and 1 hour, to decide how you would like to enter, like on top-down analysis. So it depends, right? So let's just assume you were anticipating, like maybe you were anticipating this low, right? Or maybe some sort of downside objective, right? For argument's sake. Now, how would I enter on this specific day or on the following day? It's very simple, guys. If I am looking, like, let's just say, for example, like if I'm looking for, you know what? I'm going to use this one. Let's go down to the 4 hour first to see. But see, this is what I mean. All you do is just look for a bearish structure. Like I really want people to not overcomplicate it. If I see bearish structure, right, on the 4 hour, and my daily chart is looking for expansions to the downside, well, this is all I'm looking for. So now, if there's a 4 hour fair value gap that forms in here, right, you just look for a retracement, and now it's up to you. Do you want to have a wide stop, right? Or do you want to go down to the 1 hour now and then start to look for entries to maybe look for something that, you could make your stop loss a little bit tighter, right? So when we play it further forward, like this one didn't give much. It literally just hit the fair value gap and just tanked, right? But let's just say this fair value, let's just say this one in here, right? So this was at daily EBP, the market comes back up, right? And this is what I mean. There's no 4 hour confirmation yet on the front side move. Look at this as an example. We're going to play a bar by bar. There's no displacement to the downside yet. So on the front side move, can you still short this, right? If you're really like adamant, like, oh my God, I know this is gonna tank. There's like there's all this liquidity that's resting. I'm gonna short this. I don't care. You can short it here and then just put a stop loss like a little bit above here if you want to be more conservative above the high. However, if you were someone who wants to wait for a downside move, you just wait for some sort of displacement. And this is the key, right? If I have a daily bias, like let's say there's a daily engulfing. I am not looking for a 5 minute break of structure. You are going to get destroyed doing that. It's daily, 4 hour for me. I don't, not even 1 hour, not even 1 hour. 1 hour comes after the 4 hour for me. If I have a daily bias, I am not going down to the 1 hour time frame looking for confirmations. Now, again, in this example, when you finally get the displacement, you probably would have missed the move because now it's like, okay, now we have displacement, right? The next candle, now think about it. When you have this displacement candle, the next candle is the same concept, power of three, and then you just look for the move lower. Now, would you have traded it like this? Like, would you have gotten on this wick? Probably not. Because you would have probably been thinking like, this is the stop loss is a little bit too wide. Because if you think about it, if you got in short like around here, your stop loss has to be above like this prior candle. Some people are gonna be like, that's kind of wide. And I don't disagree. But the thing is you might miss the move, right? However, if you have a daily target, and maybe there's a fair value gap down here, this is still a 2.84 R, which would have hit. So all I want to see when I have a daily bias is on the 4 hour. I want to see same thing, like market structure breaks, retests, displacement. So you're just looking for bearish structure on the time frame lower. If I have a 4 hour bias, then I'll do this on the 1 hour time frame. So the key is on the lower time frame, all you want to see is the lower time frame entry confirmations, and you want to see bearish structure uphold. It really is like that's all I do, honestly. Once I get the direction, I just look for bearish structure. Here's a trade actually I took on gold this week. This one was very, very simple. Same exact concept. So while this was forming, right, I already saw that we took out the prior week's high. And then we also had this fair value gap. Mind you, we didn't trade into this fair value gap at this point. And this was a trade I took actually during an Asia session with one of my friends. So on the daily time frame, okay, we already have displacement and the price kind of rallied. And mind you, we did not trade up in here, right? So this was on this specific day. What do I have in here? So my weekly time frame, I'm like, okay, mind you, the weekly candle was still printing, but I'm like, all right, we have a displacement. We took out prior week high and we have a displacement, right? Inside of this overall displacement, what do we have? We have swing low, swing high, break down. So this is going to be our overall breaker, order block range, supply zone, whatever. So now what am I going to look for? I'm going to look for on the 4 hour time frame bearish structure. What do I have here? Right? We have a swing high that formed, sweeping liquidity, pushing lower. We have this fair value gap that also formed on the right here. And let's just say you know what, let's say you don't want to use this. Let's just say you just want to draw a fib. You could do that too. And you could either short on the front side move, right? But look what happens. And to be fair, I actually took this short in here, and I was holding, and then this rally kind of stopped me out. And I just looked for another entry. What do I have now? I'm pretty sure you guys can see, like it's staring right at you, right? 4 hour bearish engulfing, and this formed during the Asia session. Now, guess what? How can you manage this trade, right? This is the weekly fair value gap. This is my potential lower low from the swing high down to swing low. Think about it. This is all bearish structure, but we already know this one's going to probably hold because the daily and the weekly time frame have bearish signatures. So what do I do? Next candle open, poof, my stop loss above here, and I'm trying to target this. Now, when we play it forward, you see what I mean? Like that's the next candle. The next candle just has a wick up. This is the power of three. When the candle's pushing up, it was looking bullish. You could just sell it. You don't have to like overcomplicate it and try to like, and like even I'm just gonna put the 4 hour time frame, right? Again, hits the 25% and then off to the races. Boom. You're done. Now again, how many people would be this now this is where it becomes difficult, right? How many people would be able to hold for this objective? I mean, to be fair, even if you hold for the lower low, that's still about 2 hour move. You could have squeezed about 2.5 hour, 2.7 if you didn't want to hold once the market made a new low. But even if let's just say you went to break even, let's just assume you went to break even and you were like adamant, like I'm gonna hold this trade. This is 3.5 R. And you never had to look at the lower time frame. So anyone in here who's like interested in swing trading, this is what I mean. Like you don't ever have to go down to a lower time frame. Now, I personally did not catch the full move. I just took out profits around here because I want to go to bed. But but yeah, like that's what I mean. Like sometimes you don't even have to go down to the 1 hour. So hopefully that answers the question. Because I know there's a lot of swing traders in here, and I think that's good. I'm not a big fan of scalping, to be honest. I think scalping, not that it can't work, but I just feel like people are more prone to go on psychological tilt trying to do that. Okay, so Sarah, second question. All pairs behave differently. Can you one day please do a video or talk about behavioral patterns of main pairs? To be honest, I don't like to think like that because to me, everything that I watch on my watch list, if it sets up based on how I like to trade, it's all the same. I will say this, the only difference is BTC will consolidate way more, right? Indices, way more volatile. FX, the problem with FX is it consolidates a lot. So sometimes you'll be stuck in a range, which is why my take profit in Forex is a little bit more aggressive. Like if price sweeps a high or low, I'm usually getting out of that early. I'm not holding to my big overall objectives, like even dollar yen. I didn't hold the whole way to the fair value gap because Forex has a tendency to kind of go sideways and it just gets frustrating. So I'll give quick tips for how to approach funding challenges. I've talked about this before. It really depends on your budget. Like for me, for example, if I'm willing to spend $1,000 a month on challenges, most challenges, because I like to buy the 100K accounts. Most challenges are what, like $400, $500, depending on if you could get a discount. So that means I could theoretically just buy two challenges, right? If I have $1,000 hard budget. If I want to go a little bit higher, like maybe 1,200, I could buy up to three challenges. Now, the key is to pick an amount that if like you lost that amount, you're not like, you're not struggling for food, right? You can't pay bills. You have to pick something that if you lost, like of course no one ever likes to lose money, but like your family situation will still be in order. So that if that's the case, then all right, I know I have three challenges and I know I can, there's no pressure. And then this is the thing, this is the key. Do not take the same trades on every single account. That is excuse my, like I don't want to offend anyone, but that's not the smartest thing to do at all. And mind you, I've done this before. It just doesn't make sense. Why are you putting on the same risk on all challenges? Like, yes, if they all win, then yes, you can they will all like pass at the same time. But guess what? If they all lose, then you have to buy more challenges. So just distribute the trades you take, in my opinion. That's what I personally do. Even on the funded accounts, I don't take the same trades on my funded accounts either. I don't care how great the setup looks. Because sometimes, how many times do we think a setup looks amazing and then we still get stopped out? So that's my personal approach. Because psychologically, you can handle this type of trading. Now, my personal thought process is you should not be taking challenges unless you actually know what you're doing. But to be fair, you shouldn't be trading at all if you don't know what you're doing. US 30 took out weekly low. Yeah. Let's go back to 30. Yeah, exactly. And see, it also it takes it up. See, like this is the thing. I don't like to look for continuations when the market sweeps a low into a fair value gap, because you run does not mean that this cannot go lower, right? It just means that this might have an impulse move like this. But yeah, dollar Swiss. I don't really have it on my watch list, but I'll just check it out right now. But if it's a weekly bullish, and I can already tell it's probably a weekly bullish engulfing because DXY has a bullish engulfing. Let's see. Yeah, same thing. Yeah. So again, thing is this, right? Where can we look to target? Maybe above this high. Let me see something. Yeah, we'll see. We'll see because this weekly engulfing, theoretically, you would not. The thing is this, you would want this area, this order block, to hold. Same thing with DXY. And if you're going to target something, I would target maybe like up here. And then just look for something to confirm on the 4 hour time frame around here. Now you have your range from discount to premium. Now again, could it go all the way up here? Yeah, but me, again, I don't like to. I just like it like Tom Dante, one of my mentors. He just trades from one level to the next. And that's the approach that helped me significantly when it comes to like risk management. So Tara's eyebrow, I'm a bit confused, which is better to use. So okay, so I had someone might actually I had a feeling someone was gonna ask this. So it depends. If you're trading on CFD platforms, for the most part, you can just use the CFD brokers because it's gonna be you might have differences in candle wicks, but the opening and closing price should typically be the same. Um, so if you're trading on a forex broker, I would just stick with the FX. Now, if you're on the futures platforms, like you're trading on futures, you could use the futures data as well. For forex, in my forex is the one that I would personally say like you could just choose. It's whatever your preference is, to be honest. But gold, the thing is this: if you go to spot, if you go to a gold chart or even a Bitcoin chart on these forex brokers on the CFD platforms, bro, they're all over the place. They look completely different. But Euro, GBPUSD, they look for the most part the same. Maybe like small changes in the wicks, but the open and the closing prices are typically the same. Okay, so futures charts, there's no futures data for like cross pairs. Dollar Swiss, I'm pretty sure I think Swiss definitely has a futures chart. Yeah, 6S is for futures. But any cross pairs like GBP CHF, GBP CAD, there's no futures chart. You have to trade the actual currency. Yes. Me personally, that's all I trade now, daily and 4 hour. And again, it's because I'm a little bit more busy now. 100%, Andreas, 100%. There's no successful full-time trader. Execute and leave is the best attitude you can have. 1000%. I couldn't agree more. No, ask, is it wrong to think that goals last week's movements, their downside was just a retracement to go higher? See, that's the thing. Let me actually finish reading the question. It's still bullish and the price was rejecting. The sell set up a buy after the price hits the high. So this is a good question. And this is like my personal philosophy on this. I'm going to keep the question up here. So if someone wants to read this, they can. This is the question that Mel is asking. See, that's the thing. You can play, and that's why I talk about the course content. You can trade a retracement back into the range. Like that's perfectly fine if you're getting signatures in price. And for me, like think about it. How many weekly candles were bullish? One, two, three, four, five, six, seven, eight. Do I want to be the guy or woman who's playing the retreat, who's continuing to buy on the ninth upside candle? For me, hell no. That just doesn't make sense to me. Why would I want to buy something that looks like this? Now, again, if you're not comfortable looking for sells, that's perfectly fine too. You can just watch something else. Now, that's a good question. Like, what if this is just a retracement before it goes higher? My thing is this, it can, but I still have this monthly fair value gap that's still open. So unless this discount level gets hit, I'm gonna take my chances and I'm gonna look for sells. You know, after this weekly candle that formed. Now, if you're someone who's not comfortable like playing the sell down to here because you don't want to like you're like oh well but, like maybe there's a fundamental factors or whatever the case is, then that's fine. You don't have to take that type of trade. You can literally tell yourself like, hey, these types of trades I'm not trading. Like I'm looking for like potential, like I want to be in these types of candles where the market is bullish and then I'm just buying, trying to get like the power of three concept and just looking for the expansion move higher. That could be your style. You don't have to do this. But for me, I don't know. I'm a contrarian by nature. I like these types of plays. So for me, I'm still gonna be looking for gold sells. And again, I could be wrong, and this could just like next weekly candle just rips, right? And then this was just a liquidity pool sweep, and like I get stopped out. Yeah, but like I don't know. That's I'm okay with that because at the end of the day, like no one's gonna ever be 100% right. So if you're like, I think some traders they overthink it a little bit. Like I know, hey, listen, I just looking for price to go from a premium after a liquidity pool sweep down to a discount. If I see lower time frame structure confirming, I'm gonna get on the backside move, and yeah, that's all I'm gonna do. Okay, so on DH, yeah, so guys, I'm gonna have like about 10, 15 more minutes because I have to actually get ready to go somewhere real quick. So MDH after daily EBP is the right way to think that the high or low of the week is most likely set. Yeah, that's a good way to phrase it. Yeah. That's why sometimes I like it because imagine like you have Monday's range and then Tuesday we have EBP and then we have a downside target. Now this theoretically on the lower time frame, this is what it looks like, right? We swept liquidity. This could be our potential high of week and then boom. So units, so first use the daily time frame for direction and then the 4 hour time frame for continuation. Yes. For reversals, it's the same thing. Like if like on this gold reversal, right? Think about it. The bearish structure doesn't matter whether you're playing a reversal or continuation, right? Because even if let's just say the market is bullish, 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 and then maybe you have a short-term reversal, you want to see backside structure, and then maybe you're targeting a fair value gap in here. In the course content, I talk about like the reversal profiles, but these are the examples I like. So you're still looking for the bearish structure. But you're just looking, but the thing is, you have to be mindful of taking profit at a key level. And the thing is this, you want to make sure that if you're trading a reversal profile, right, that there is something like a fair value gap that's here that's not been traded to, right? So now I'm thinking about it. I'm trading the backside structure, backside structure. And then once the market hits at that area, for me, trade is done and I'm on to the next setup. I'm not thinking like, well, I wonder if this is gonna be a continuation. I wonder if this is gonna be a continue to the bearish side. Like, no. Once price hits my objective, like dollar yen, I just yeah, I just wait for the next setup. ICT called it terminus. Once price hits terminus or his objective, that was it. And it's these small things that just make a massive difference. Yeah, Kunal, I for gold, I'm just sticking to the futures charts moving forward because there's too much discrepancy on the CFD chart. So, bro, there is no need to use the EBP. I mean, that's your preference, right? But the thing is this, I use the EBP to give me my signals. So I mean, you don't have to use it if you don't want to. If you prefer structure, I mean, guys, like the EBP is just this, right? Like it's not rocket science, but the closure gives you confirmation of the displacement. So then you could just look for cells. And mind you, this is like this candle is not subjective. It is what it is. It's 100% like mechanical. So it helps to determine, like you could just do your analysis, like I said in the beginning, you could do your analysis with EBP first and then see, hey, if I see a bearish EBP, does this give me signs for reversal? If I see a bullish EBP like this one, is this going to set the stage for a continuation? So why would I want to do all the analysis and break everything down when I could just have the EBP give me the signal? And I'm like, okay, well, now you reverse engineer your top-down analysis. Oh my, but don't you say to look for the entry at 50%? An example you just gave it with. So you can get the entry from 25 to 50%. That's your range. 70%, to be honest, I talked about it in the video, I think one of the webinars. If it goes down to 75%, it's the probabilities of it continuing higher is less likely. But again, it all depends on the range. I've talked about this before. If the 4 hour candle is a small candle, and maybe you have a huge target, right? Like based off of daily time frame, you don't even have to wait for 25. You could just the next candle, once it closes, right? As long as it's not a huge candle. You can just enter and put your stop loss and then just target and you'll get a 2R, 3R depending on the range. So again, there's so many factors. The size of the engulfing bar is important as well. Let's just assume this is a 4 hour time frame, right? For argument's sake. And you see this. You don't even have to, you could just buy on the next opening price, put a stop loss beneath the low because this candle is a small candle. And let's just say maybe this is a higher high in here, right? But because it's a small candle and there's enough room to the upside, even to this liquidity pool, that's 2R. If you hit the 4R, I mean, I'm sorry, if you hit the higher high, that's 2.89R, and you never have to go down to a lower time frame. Let's just, I know this is a weekly time frame. I'm saying, like, assume that this is, and let me actually just, for argument's sake, right? Let's just assume like this candle close. I mean, this candle close, you don't even need to wait for the 50%. You could just enter on the bar close and put a stop loss beneath the candle. And it's a small candle. Again, assuming this is a 4 hour time frame. I mean, heck, you could even do this on the weekly time frame if you're someone who's very patient. That's what I mean, guys. It doesn't have to be this complex. Like whether you enter here, whether you enter at the 50%, whether you enter, or maybe you want to enter at the 70%, like 75%, I'm sorry. That's up to you. So don't be like, that's why I always tell people like experiment what works well for you. For me, if I have a higher time frame objective and I have room to run and the candle's not that big of a candle, like now, like for example, like let me try to find a huge engulfing bar. Yeah, maybe if I go down to daily time frame, I'll find an example of what I mean by this. Okay, here's a perfect example. Like now, would I would I take this one on the close? Probably not, right? Like because this candle's huge. So my stop loss has to be very wide. Even if the market can go down here, like it's just the risk reward doesn't make sense. So hopefully that makes a little bit more sense. However, look at something like this, right? This is a decent weekly, decent bar. It's not too big. Okay, maybe this one you want to wait for 25, 50%. If you're like telling yourself, hey, I want to wait for the 50% or close to it, that's perfectly fine too, guys. That's 100% fine. But for me, I don't want to miss a trade, especially if there's a higher time frame move that's associated with it. Is the XY weekly bullish, bias bullish for upcoming week? I'm gonna make the weekly commentary about this as well. I talked about it early in the beginning, but I'm gonna make the commentary video and post it in Discord. How not to how to not repeat same mistakes. Listen, man, sometimes just like Nike says, right? You just gotta do it, man. Just gotta do it. I have count how many one daily golfing bar has on dollar Swiss for 2023, 24, and it was 80 for 10 pairs. Yeah, I mean the thing is this, yeah, but that's why I tell like people, like I'm not like if I was trading like the if I was trading the engulfing bars the way I do, right, on the daily, weekly, and 4 hour, I wouldn't have all this on. Like before, people who knew me for like about a year and a half ago, 2 years ago, right? Like I used to only trade EU, but now like if I'm trying to trade the engulfing bars, like I need, or let's say if I want to focus on higher time frame, right? I can't be watching just EU. Like I'm barely gonna trade. So yeah, so you might have like a certain amount, like let's say 80, and obviously the thing is all 80 of them are not going to be tradable, right?